Hello, Jeff Green here, and welcome to another Monday market update. I have to apologize. I was so busy yesterday. It's now Tuesday morning and I'm recording this. So it's a Tuesday special edition of a Monday market update. Let's name it like that. So here's what we're going to look at this week. Arizona real estate market monthly update. We're going to do a lot of comparison to end of month October. These are the sort of topics I've carved out for this week. Average single family price drop from the peak is currently about 12%. I don't consider that a crash, but it looks like there may be some buying opportunities coming up here. Average rental rates have been somewhat stable for 18 months. A lot of people are going to say, Green, you're crazy. My rent just went up $300, but we're going to talk about how rent can be very locally oriented. Renting a home is guaranteed 100% loss versus 1,000% gain. That's a 10 times gain, not 1,000% gain. But we'll take a look at one little sample over the last 10 years. Foreclosures still remain low. No market update would be complete without at least a glance at foreclosures. And the evidence is that Metro Phoenix and surrounding areas, supply and demand appears to be balanced at the present time. So let's jump into the slides and we'll get this done here. So here's the market snapshot. What we want to do in this version is look at today versus last month. Which was last updated on 11/5. So this is fresh off the mill. So next month market update, we'll start looking at comparisons over last year. So for this update, we're just looking at today versus the last month. And you can see active listings have dropped a little bit. That's telling me that supply might be drying up a little bit. And we'll see that in the charts here as we go forward. Pending listings, these are listings that are coming on the market. They've dropped a little bit also down from November at this time last month. Listings on the contract, a little bit less. Sales per month, a lot less than last month. So certainly the market is quieting down, and third quarter and holiday season has a lot to do with that. Believe it or not, this is an interesting statistic. 89,000 sales as of this year. 93,000 sales last month. So additional evidence that the market is quieting down, perhaps for, again, seasonal considerations, but certainly because of interest rates going up. Days on market, 61, so a little bit longer days on market. You know, depending on who you talk to, days on market might stretch anywhere from 60 days to 90 days for a balanced market. I think that's a fair, reasonable assessment. That days on market, this line here is days on market that are sold. This line here, days on market that are active. These are properties for sale. So we're right between 60 and 90. We're towards the upper end of 90, which might indicate a buyer's environment. But we'll look at some numbers here in additional slides that sort of point out that that might not be the case. Average listings per dollar per square foot. Not much change. As a matter of fact, a little bit of increase since last month at this time. Monthly sales, a little bit of a decrease, dollars per sale month. So listings are trying, so sellers are trying to get what they can and negotiating down a little bit, but I don't consider that very significant. Monthly appreciation through today's date is 1.8%. Last month it was 6.4%. So prices still are pulling back a little bit. And then down at the bottom here, I have a separate slide on the Cromford Market Index. So let's move on to the next slide here. So that's a little bit of the market snapshot. Let's talk about the monthly average sale price. So this is back in February of 2012, where the average sales price was $163,281. And we reached a peak in June of $600,411. And since then, we've dropped down the average sales price, $531,734. Which is about 11.5% drop from this peak. So we certainly have had a drop, not totally unexpected, but it's not the 20, 30, 40, 50% that many media articles will have you believe. And also in the Phoenix and Arizona area, the sales are a little bit more, shall we say, stronger. So that's a little bit on the overall monthly average sale price. Here is the monthly average lease price per square foot. Now let's move this out of the way here for a minute. This is what I was talking about when I said they've been fairly stable for the last 18 months. And you can see they have $1.35 is the average, the longer term average. But if you take a snapshot of the month, they're down to about $1.32. So you can see that that's about the same level that we had back in the middle of 2022. So that's why I say for about 15 months, they've been fairly stable. Now, I'm sure I'm going to get some calls and says, Jeff, you're crazy. My rent just went up $300, $400, $500 a month. So remember, this is monthly average lease price per square foot across harmless residential rentals. So it excludes vacation rentals like Airbnb and things like that. But you have to remember that Metro Phoenix is a wide area. And I think coming up here, maybe next week or the week after, I'll do a detailed report on rental rates. And you'll see that depending on what city you're in, depending on what zip code you're in, and depending on what neighborhood you're in, there is a high demand for those areas. And landlords can sometimes see that and put the rates up higher in certain areas and not as high in lower areas. So in general, it's been fairly flat. That's what I'm going to say. That's what the numbers show. So let's take a look at, and this is something I alluded to on the front slide. This is the same monthly average sales price. And I want to point out that renters should be looking at buying a home, if only based on the fact that that's where most homeowners' wealth comes from. So let's take a look at these numbers. Down here, the average single family residential home, three bedrooms, 2 baths, 2,000 to 2,500 square feet, sold for $163,281. That was February of 2012. Now, even with this pullback, the average sales price sold for $531,734. So that's a giant increase over what's that, four or five times increase. So let's suppose that a renter could get into a home for about what their payment was on a rental, right? So they can come up with a 20% down, which is $32,656. That's 20% of that number 10 years ago. So it's not quite, it's a little bit more than 10 years. But the home equity of that home is now $369,376 once you subtract out the money that was borrowed to buy the loan. Now, this $369,376 home equity doesn't include mortgage pay down while you live there. So that's an important fact to remember. As you're paying rent, you got 100% loss. As you're paying a mortgage, some of that money, fairly decent size, goes to paying off the loan. So let's look at the numbers over these 10 years here. Renting the average home at $2,200 a month cost, that's today's cost. So it wasn't the cost back here. So I didn't extrapolate what that was, but let's say at $2,200 a month for 10 years, you're going to pay about $264,000 for your home, for your housing costs. So let's say the average month cost was lower back here and has risen, so it's somewhere in the middle. The average will be somewhere in the middle. So let's say it's $1,500. So let's say you only paid $200,000 over the same time. That's a significant amount of money to pay for housing, especially if the housing price is the same cost per month as rent. So what's the difference between buying and renting? So there's the $264,000, which is 100% loss. You can't claim any gain on renting because you're paying your landlord. You're paying off your landlord's mortgage. That's why I work with a lot of investors, because they see this sort of equation working off them over time. Now, if you had owned that house, you now have, like I mentioned up here, $369,376 in equity. That's 1,131% growth, or multiplying your down payment over 10 times. So look at the numbers. Your small down payment of $32,656 is now worth $369,376. So I would encourage renters to start looking at home ownership as a way to build wealth. I would be the first to say I have no idea what's going to happen to this number as we go forward. But I don't think that inflation is going away. Inflation is always here. And I think home prices will continue upwards after we have a sort of a basing pattern here, and especially when interest rates drop. If the Fed lowers interest rates next year, my projection is still late spring, early summer. I think prices are going to take off again. So be aware, look at the numbers, and make sure you're putting your money where you can build long-term wealth, not throw it in the trash or pay your landlord's mortgage off. Okay, let's look at the notices of trustee sale by month. Like I said before, no market analysis would be complete without at least a glance at the trustee sales by month. Now, these are foreclosures. You can see that it's jumped up a little bit, but it's still way at the low end per month. So that's not showing any signs of distress in the housing market at all at this time. The next chart is a summary. This is the Cromford Market Index. And we've been hanging around here right at 88.5. Anything less than 90 or 100 is sort of tips towards a buyer's market. The supply, we talked a little bit about that earlier. The supply has come down. So the market's starting to tighten up. And demand has also come down, clearly based not only on seasonal differences towards the end of the year, fourth quarter, but interest rates. So here's a little bit of the trend on each one of these charts. The supply index trend, like we spoke about, is still falling. People are not selling as robustly as they used to. The market index trend is flattening out. This is this number in chart form, but you can see it's formed sort of maybe a bottom here. So right now you can say that we're in a balanced market, maybe tips a little bit towards the buyer, but hardly enough to measure. And the demand index trend is still dropping. We had another drop over the last month. And that, of course, is for seasonal type stuff. And of course, interest rates, which decreases affordability. So that's sort of where we are. I think we're in a balanced market, at least for the time being. Watch out if interest rates come down, because I think you're going to see this return again, especially here in the Phoenix metro and across Arizona. Let's take a look at the summary and key takeaways. So average single family price drop from the peak in June is about 12%. That's not a big number. It's nowhere near the, what was it, 40, 60% in 2008. I don't think we're going to get there this time, but we'll watch these numbers closely. Stay tuned, subscribe to this channel for regular updates. Average rental rates have been somewhat stable. Renting a home is a guaranteed 100% loss. So if you're paying $2,500 for an apartment or rent on a single family home, I would encourage you to turn that into a mortgage payment for $2,500. You know, we've got tons of programs for first-time home buyers, for current renters, vets, VA loans. And it's unusual for a first-time home buyer to put up 20%. If you don't have 20%, call me anyway. The longer you wait to buy a home, the less wealth you'll build over your lifetime for your family's benefit. And of course, when you buy a home, you have the enjoyment of the home, and you don't have to possibly move every year, which I can't even imagine. Foreclosures remain low. Metro Phoenix and surrounding cities, supply and demand appears to be balanced at the present time. If you want to get into a home, don't wait until interest rates start falling. You need to get pre-qualified and sort of know what the market is before you lose the next window of price increases. So that's it. I hope that helps. Let me tell you some more resources. You can go to jeffgreenrealtor.com. You can get all sorts of access to my YouTube channel, to all sorts of other helpful Arizona real estate resources. I encourage you to subscribe to this YouTube channel. I publish at least once a week one of these Market Monday updates, even though today's Tuesday. And there's other information there also. If you want my regular newsletter, you can go here to this address and sign up. I promise I will never spam you, so you can rest and sleep comfortably. So hope that helps. Hope you have a great week, and we'll talk to you next week, hopefully on Monday. See you then. Bye-bye.